Earnings came in a little bit better than expected and were helping push the market up going into the close on Friday. But what is coming up this week? Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. My name is Chris. I'm part of Riz International, and we're a group of traders who are looking to make our money work for us and not work for it. And so this week, we're going to take a look at the market and see what's going on like we usually do, and a lot of up and down this week, to say the least. Obviously, we kicked off earnings season in earnest this time with some big names reporting early on, and we definitely had some downside early on in the week. Big push down. We were looking like we had blown through 4,100, and then Thursday came and Friday and just erased all of that downward movement that we had. But I will say that we basically closed right where we were. Looks like here like last Tuesday, so we really are kind of just running into this resistance here right around 4170. We'll have to see if that holds up moving into this week, and we've got more big earnings announcements coming up, as well as some big dates coming up this week. So we'll talk about that here in a little bit. But really, there's a lot of movement in the market this week. A lot of down and then up. And so there's been a lot of potential there. And if you've been following us in Riz Elite, you will have been making some cash if you would have been taking the trades that Riz has been posting so far. But if you're not and you want to keep updated on the market, do me a favor. If you're watching this on YouTube, make sure you smash that like and subscribe button. Click the bell for notifications so you get notified every time we upload a new video here on the channel. We really appreciate it. Basically a lot of down and then a lot of up this week. So it has been a little tricky, but that gives us nice opportunities to get in. And if you have been following Riz's trades pretty closely, you should be in pretty good shape at this point. Let's take a look here and see what's been going on and where we're seeing the most movement. And honestly, communications and tech are really spiking up here over the last couple days. Consumer discretionary is pushing up as well, but and following the market almost identically. But really a big move there in communications and tech. Really big pushes there, and I'll show you why here in a minute. But we still have basically everything curling up towards the end of the week. We've got our consumer staples, which is still positive on here. Real estate, energy, both above the zero line now. So that's the first time in quite a while that we've seen that. They've been kind of hugging that, but still, we did dip below and came back up. But those still underperforming is healthcare, utilities, and financials. Though financials is starting to curl upwards, though a little surprising with the First Republic Bank news, and we will cover that here in just a minute. So stick with us for that. But yeah, everything kind of trending up at the end of the week with these strong earnings results on some pretty big names that really kind of help push the market towards the upside. Taking a look here at the asset classes, oil really not doing a whole lot this week, kind of pushing down below this 82 area before and really just consolidating sideways at this point. So really nothing much to talk about here with oil, nothing too exciting. From what I understand from OPEC Plus, they're not planning on any more production cuts, at least for the time being. We'll have to see if that holds true, but that was the word on the street, as they say. And after its big parabolic move for gold, gold has pushed up close to this 2050 resistance area, this high that we hit the last time, which was about March of last year, and we just kind of rejected off that pretty hard and really are just kind of consolidating here right below $2,000 per ounce. So definitely some weight being held in that 2000 area, and 2050 seems to be a pretty hard stop for gold right now. We'll have to see if that holds. But of course, there are other forces pushing on gold as well right now. But I think the better than anticipated earnings results on some of the big names out there really kind of helped, people put more risk on, meaning they're getting back in the market. Which means that we would see a bit of a decline in gold if people are moving away from that asset. Let's take a look here at the bond yields, and really not too much to talk about. After the big crash with Silicon Valley, we really have just kind of consolidated sideways. Looks here like the 2 years are doing at about 4%. 10-year Treasury yield bonds are about 3.4, and 30 years about 3.6. So really not too much to talk about here. And, what everybody seems to be talking about, which I think is really honestly a lot of chatter, is, everybody's like, oh, the dollar's crashing. Well, it sure doesn't look like it's crashing to me, guys. We kind of came up, we came back down a little bit, and really just kind of trading sideways. So the dollar seems pretty good to me, pretty, fine. I'm not seeing a crash inbound or anything like that. I know that word likes to get thrown around quite a bit, and people like to be a little sensational. But yeah, dollar is looking okay. In my opinion, everything's looking just fine. But something that's not looking fine is First Republic Bank. So we're going to take a look at that as well as one of the big earnings winners this week. And we'll cover those in a minute. Actually, I forgot we have something else we need to do. But while I'm starting this up, for all of our members here who are live, if you want to start posting your questions, now is the time to do that. But first, let's take a look at the earnings that are coming up this week. And we've got some big names reporting. Starting on Tuesday, honestly, Monday, yeah, really nothing really to talk about. Honestly, that's fine if you like these, but we got bigger names on Tuesday. We got Pfizer, we got AMD, we've got BP and Marathon, some oil names going to be reporting. And then later the week, we've got some big names as well. And honestly, the biggest name of them all, Thursday after the close, Apple is reporting. And that will be a big one as well. And then we got Shopify coming in, Datadog. We've traded that before in Riz Elite. Some other things coming up here. I'm not seeing anything too big. We got Shell. That's another big oil name. And then Friday is pretty much just, okay, yeah, let's go to the weekend. If you like meme stocks, there's AMC, but we're not going to be touching that. I'll tell you that right now. But there is more than earnings going on this week, whereas last week there really weren't any big numbers being reported. We've got the big one this week. Wednesday, about middle of the day, we've got the interest rate decision. And right now they're calling for 1/4 of a percentage point, otherwise known as 25 basis points. So they are expecting another hike at this point. So Wednesday, we're going to have a big catalyst. Now, looking at earnings on Wednesday, not too much I'm super interested in. I mean, as far as names going in there, CVS is always interesting. Qualcomm is decent. Phillips, another oil company in there. Estee Lauder sometimes has some movement to it, but nothing major here, which I find kind of interesting because the big catalyst on Wednesday is going to be that rate decision. And then we have unemployment on Friday as well. Now, of course, we saw on the earnings calendar really much more of a nothing burger on Friday as terms of earnings is concerned. But yeah, those are going to be the two big dates, for this week. We're looking at Wednesday afternoon. So right coming out of lunch at 1 o'clock, we'll have Powell come out and tell us that they're raising interest rates. And then he's going to get on the camera and he's going to yap. And then we'll see the market jump around depending on how he's talking. And then unemployment Friday morning before the open at 7:30 should be a big one, to say the least. But as I promised, let's take a look at First Republic Bank. This is the one that's in the news right now. So here's what's going on with First Republic. From what we understand and what's been reported, the FDIC has taken over First Republic Bank at this point. They are basically looking for final bids from other banks by tomorrow to buy them out and basically absorb their holdings into their own. And from what we understand, depositors at FRC should be fine. That doesn't mean that the bank managers and things like that are going to be fine, but depositors should be covered by FDIC insurance, especially if they are below the $250,000 area. You should be fine. For those over, well, we'll have to wait and see if they decide to do the same thing that they did with Silicon Valley. I believe that they are planning on doing that, but I'll have to double check. I didn't look before we got on the webinar. But yeah, First Republic looks like she's going under. So this one's pretty much dead and looking to basically be absorbed into another bank at this point. There are bids out, from what I understand, from Bank of America, JP Morgan, or at least they were looking for bids. PNC, I think, was also in there as well. So, definitely some big names in there, but we saw this before with Silicon Valley where they were looking to try and have another bank take them over, and no one wanted a piece of it because, well, they were in the red, and they were deep in the red. So I kind of understand why they stayed away from that. I would have as well, honestly, but Yeah, it looks like First Republic has been another bank that is going to go the way of the dodo bird. She's done. It's just all done but the crying at this point. So we're looking to see if they will announce a takeover from another bank to absorb the creditors there at, or excuse me, the depositors, not the creditors. The depositors there at FRC by tomorrow, Monday at the latest. So looking at our questions here, Jeff says he is thinking about Kane for a short, and I see why. This is a beautiful short setup, if you ask me. What in the world happened to this thing? We went kind of parabolic, though that being said, this is kind of a bit of a penny stock before, and we kind of went nuts. I'm not exactly sure what the catalyst is on this. I'd have to look it up, but yeah, this looks ripe for a short, but just be careful because it's looked ripe for a short before. I would put first off, of course, we're going to see what's going to happen on Monday, but we are well extended past the moving averages. We are way overbought on the RSI, and this thing is due for a correction. Now, it sure looks like it wants to roll over here. We made a lower high on Friday, and we made a lower low. Now, that being said, there was a lot of buying pressure down there. So even though we have these technical signals, there's still a lot of indecision, even up here at how extended it is. I will say this is a great setup for a short, if you ask me. But of course, be very careful with these parabolic movers because things can stay overbought for a period of time. It's not like we magically get to the overbought area and we immediately go back down. So although I will say from a technical aspect, this looks very good for a potential short. My stop loss would be something at about 14.25 at the most if I were to get in. So if this starts, if this starts looking red on Monday and we start to sell off and you go ahead and jump in short, my hard stop loss on this would be 14.25. That would represent a new high, and that's bad for a short. But if you do get that rejection there, this is a beautiful place to get in. So I would say be careful, but I would set a hard stop loss on this, especially if the market continues to rally on Monday. That could, potentially push this a bit higher. Now, I understand you're not just going to willy-nilly jump in short on this, Jeff. But if it were me, I would wait for it to look red on Monday. And if it does, I would go ahead and take it, me personally. Not giving you financial advice, but if I were to do it, this is how I would do it. If we get down to like something, a little bit further down, maybe in this 1370, 1365 area, and then yeah, I'd do a hard stop at 1425 at the most. 1415 is more conservative stop, more safe, but that would definitely be a good place to look. Hey, no problem. Yeah, I mean 11 or 12, it could definitely do that. If we get the rollover, 11 seems to be a bit of a push. I would be more comfortable taking it off at 12. That would be a very big retracement back that direction. So with the moving averages, crashing up so hard, I would be careful trying to push it to 11. I'm not saying that it can't get there, but I would definitely, if you get to 12, I would take some off for sure. Sankit wants us to take a look at Amazon. Now, this is one that was looking good. Earnings were great. We beat EPS by quite a bit, actually. Revenue was great, but then the conference call happened. And the conference call is what killed us. And they were basically saying rather, lukewarm numbers for AWS. And so since the AWS numbers were down, which is one of Amazon's big money makers, since those numbers were not as hot as earnings were, kind of turned from green to red. So that's a little bit unfortunate, but that is what happened. Was the conference call on Amazon really soured investors on that. And so we saw a decent sell-off, and not huge. I mean, it's down 4%. From where we started on Friday. So a bit of a bummer for Amazon, especially with those beautiful numbers on earnings. And I think that this really goes to show how important their other factors are when it comes to earnings. Sure, we can look at it and be like, hey, well, they beat EPS and they beat revenue. They should be going up. And we kind of kind of had that on Thursday, but then, you know, things are just not so hot with Amazon Web Services, and everybody's like, oh, well, that's a problem. And so they just kind of started dumping their position. So that's what happened on Amazon. Still a great company, the number one online retailer out there, from my understanding. And if you got in on this earnings beat and you're holding now, I would not have a problem continuing to hold on this one, because Amazon's doing just fine, all things considered. That also being said, there have been a decent amount of layoffs at Amazon, from what I understand. There are a lot of layoffs going on in the tech sector right now. And part of me wonders if that's maybe why these earnings are so good. Now, I could be wrong on this, but if you're cutting your workforce, so you don't have to pay people as much so you can make more money. The problem is, as I'm sure that we all know, when places like that do things of that nature, at least in my experience in my work past, it's always when you let somebody go, they just dump the work on somebody else, and they expect someone else to do just as good a job at it. That's always been my experience. I don't know if they do that at Amazon. I'm not going to go out there and say that, and I definitely don't want Bezos coming after me and telling me that how wrong I am. But if he would love to get on the webinar sometime, I would love to pick his brain a little bit. I don't think he's coming, guys, unfortunately. But yeah, it's the AWS numbers that really just pushed this down below the 200. It looked like the 200 was going to hold, actually, but no, broke down pretty low. So that was the deal with Amazon. Again, still, if you got in and you're holding it, I would have no problem holding this long term. Amazon going to be doing its thing for quite some time. At least that's my opinion. So awesome. Well, I wanted to thank everybody for coming out. As always, I try and respect your time as best I can. I'm not seeing anybody else typing questions in at the moment, so I want to let y'all go. I want to say have a great weekend. We got lots of things coming up, and like I said, guys, this is the big catalyst for the week here on Wednesday. Rate day is always a huge day, and then unemployment numbers will have some work pre-market. So make sure you're keeping an eye on things during that time. If you have profitable positions and you don't want to deal with the whipsaw that we have in the market during those times, it may be a good time to sell. But again, you need to trade at your own discretion. We're just trying to make you a better trader so you can make the decisions to make sure that you're making as much profit as possible. I want to thank all of our elite members for coming out. It's a pleasure as always, and we'll see you in the market on Monday.